Hello. Thank you very much. Good afternoon, everybody. I think for everybody, when they woke up on 1st of January, as Bisola said, it was all tax, tax, tax. And for the creative sector, we've all been told the stories that content is the new crude. It's expected that it is going to make $15 billion this year. It's going to employ 27 million people. There has been growth, 4.7 growth. Have you been seeing the money? So when you add the complexity of tax on top of it, you then ask yourself, where are you going to go to? But the panelists we have here are going to tell us it's actually not complex.
Yeah, it's not.
So I'll start with Mr. Ariyibi. Mr. Ariyibi is going to become all our friends because he represents the NRS. Mr. Ariyibi, the tax reforms, the Nigerian Tax Act, what is going to be the impact on the creative sector, particularly the film industry?
Okay, thank you very much. Good afternoon all. It was a privilege to be here. As a staff of NRS, I'm also here as a citizen of the Federal Republic of Nigeria. So beware. Disclaimer. The industry outlook regarding the new tax law, just like Mr. Abraham have said, just sit back and relax. Because according to the new tax law, the creative industry have nothing serious to worry about. But before I proceed, there is a farmer whereby in his farm, he have a lot of bananas and monkeys moving to eat the bananas, and the farmer will come later in the evening and chase the monkey away. All of a sudden, the farmer died. And the monkeys were happy. They jump into the farm, they finish all the banana, they move out. The following day, they jump in, they did not see any banana. It simply means that the primary objective of this new tax law is not to win short. It's not to tax the roots, but to tax the what? The seed.
Tax the seed
it's not
and
to
not
tax
the roots.
the roots, but to tax what? The seed.
Okay.
The goal is not to kill the company. The goal is not to win shunt the company. Because if we win shunt today, where will the revenue come tomorrow? Creative sector have a lot of advantage in terms of their long gone benefits is going to be better off compared to where it was before the new tax law. One thing I would just advise is, in which Mr. Abraham have said that, record keeping.
Record keeping.
Record keeping, transparency.
Transparency.
Apart from you keeping record for tax purpose, it add value to you as an individual and as a company. No investor will bank on you if they can't track your finance record. You get contract today is because of they check your finances, they check your transparency level. Just like Sister Mo have said, she has been, contract here and there, partnering with Netflix is because of they can track serious financial transparency with her. So the long gone survivor of this industry regarding this new tax law is 100% guaranteed. However, there might be slow down in the short run.
What do you mean by slow down?
If the enforcement is too rigid, we are talking about long run. According to Adam Smith, it is someone that survives short run that will get to long run. Adam Smith said everybody will die in the long run. Abi? So what is going to happen in the short run? This year is the year of implementation.
Okay.
What is going to happen? And I believe, back to my first story, since we are not taxing to kill, automatically the short run will not be a problem. We will get to the long run. Thank you.
So are you saying in the short run there's going to be some sort of grace? Or
no, I'm saying that there might likely be slowed down if the enforcement to comply is too harsh. Just like I'm beating a child that listen, no book, the child might die before he graduates.
Okay, so is the NRS going to have a lot more events like this where there is a lot of education?
Of course, it's work in progress. Just like, Nigeria tax law have always been, better. Today, law, before you wake up tomorrow, they might say this one, just like the way we have Finance at 19, Finance at 20. So the law keep growing every day, every day. They keep on looking at it every day. Any gap, they remove it, they replace it. That is just the way it is.
Okay, thank you very much.
Yeah.
Abraham, in your presentation, you talked about structuring. You also talked about compliance. But beyond compliance, how can the creatives who are thinking about growth, how do they work with brands, platforms, and investors? How can they structure their operations when they are working with all these third parties?
Right, thank you. I think the issue of structure, again, to be honest, is still where one of the problems is. Like I made reference to my days in Deloitte that led me to work with this investor, right? The reason why the investor did not trust the system, why we had to come from Deloitte to sit in the system, was because the production houses they were giving money to, they could not account for the money for the commission content. But in South Africa, they could account. So the problem was now that they could not even respond to budget versus actual. Most of them didn't have application. Knowing this was Nigerian, so we did the Nigerian thing by pretending as if they were structured, by giving them structure. So we did an internal work of giving them structure first. For that reason, in fact, that was what led us to developing an accounting application, a creative accounting application that had not been done before. We had to create it and then gave it as a tool for the production houses to be using in such a way that the investor is seeing the use of the fund without anything. And guess what? For that reason, there'll be more fund in that particular company today than ever, only because of system. That's number one. For our company, sincerely, today, a lot of people need to decide whether they want to continue to maintain the & Co business. Structure is key. Now that you had the new tax law that you're 100 million and below, you're free from taxes, I think you need to register a limited liability company. Because
you're suggesting that
all
the business names should...
because that benefit applies to limited liability companies. You get what I'm trying to say?
Correct.
But even if you want to maintain your & Co, really, it should be for the smaller things. It should be for the things that nobody can track. But for the core stuff, because you can imagine what that would do for you. All of that incentive is only for limited liability company. If you keep your business consistently as a sole proprietorship business, the PAYE law applies to you completely, and not all of the laws I read here. So first is about structure, number one. Number two, to be honest, if you are structured, you'll be able to do businesses with the international brand. That's a problem these people were having. These guys are very straightforward people. They want to see your financial statement. You see. But again, and thankfully, sincerely, the past 10 years have been very good in the creation because a lot of businesses have stepped up, at least that I know. Many. They were not structured, they are now structured. They could now do a lot of things with other companies. And so structure, again, is important. Don't take your time here.
Okay. Yeah. Well, in about 30 years of my practice, I would say that in order to attract investment into companies, formalization, compliance, documentation, things people can track. All of us are investors in one way or the other. If you cannot track where your money is going to, it's unlikely that you are going to invest.
Yeah.
Many creatives have historically applied 5% withholding tax when they are engaging talent, crews, writers, and then they do 10% for rentals. With the new tax law, we're just seeing references to 2% in certain circumstances. Are you able to explain in which circumstances you apply 2% withholding tax, 5%, or those 10%, or what really applies, and how can the creatives apply this correctly? Mr.
Okay. The issue of withholding tax, according to the law, according to the Act, there is something called withholding tax schedule. And according to the withholding tax schedule, we have the schedule show the classification alongside with the rates. for both residents and non-residents. When we are talking about supply of goods, it's 2%. Before now, we don't have 2% in existence. We only have 5% and 10%. For professional service, 10%. For normal fee or whatever, 5%. But now, the issue of 2% came in only on equipment hire, like camera or any capital equipment hire for the production.
Okay.
Just like it is being written in the structure, in the schedule, supply of goods. You hire it, 2% withholding tax. Now, the question now is, does that mean that I thought, okay, the question that is going on is that, okay, my crew, my dad should be 2% too. The question is, the money you are paying your crew, what in your transfer or your whatever, what is the description? Is it a fee?
Okay, how have you described the amounts that you are paying your crew members?
It's very straightforward. You don't need to confuse ourselves here. 2% is for hiring of equipment used in production.
Okay.
5 and 10% is now based on either is a professional or is not a professional. If it's a professional fee, like you hire an expert, 10% and is final. The person don't need to file before they charge the 10%. They just charge the 10% and move. That is for non-residents. So in a nutshell, the 2% that came in is for equipment leasing. However, like I said, the law is still in work in progress and implementation. We can wake up tomorrow and we saw another revised position.
So the applicable percentages are 2% for
2%,
goods.
5%, and 10%.
Okay, 5%. You didn't say what that applies to.
No, I said 5% to normal, it's going to be staff.
Non-professionals.
Yeah, it's not professional.
Non-professionals.
Yeah.
I guess that's where the issue is going to come. So in the creative industry, in the film industry, who is a professional and who is not a professional? I think that's one of the things that the industry itself is going to have to help NRS come to a conclusion. Who is the professional in the industry and who is a non-professional? Because it does make a difference between 5 and 10%.
A professional is a person that you just invite to the set for a contribution. Like, let me put it like this. You know that this is the best hand you can call for it. You just hire him for, okay, I'm coming here to spend 2 weeks for this location, and you move. You pay the person specially for it. A professional is different from crew. You have a crew. When you are producing your movie, you have the set of people you want to work with. But on the other hand, you might call best hand that is more capable in relation to what you want to achieve. I don't know if I'm making sense in line with the industry.
No,
So professional is more or less like outsourcing a separate person, separate entity to come in for betterness of the production. Then,
Okay, so the questions...
No.
It's not black and white. When we come to the question and answers...
what is not black and white?
The way you have explained it in the industry is is not clear cut, which is why I was already opening it. That I think this is
I'm
an
looking
area,
at this from the angle of
where the industry
accounting and finance.
where the industry is going to have to make suggestions to the NRS.
Okay, what do you say?
I think this is when you are preparing the guidelines. I think this is one of the areas that the industry has to make suggestions to the NRS, so that there can be clarity as to who a professional is and who is not a professional. Because the difference of 5% and 10% is a bit.
Okay. To be honest, if I were just to say something on that, then if I were you, I'm not a professional. I'm just a service provider, and it's 2%. Please structure the contract in such a way that I'm just rendering a service. I'm an ordinary human being. If you put it that way, it's 2%, then I'm free.
No, 2% is for goods, he explained.
It's not for goods alone. No, he said, is it for goods alone?
No,
not only for goods alone.
Or for your crew as well?
Yes.
Okay.
So I'll just say I'm crew. We are all crew, I'm telling you.
VAT and cinema economics, the continued application of the 7.5% value-added tax under the new tax system, how does it affect the sustainability of the film value chain? I know earlier I'd already had, it appeared that, what the amounts that are made in the box office, nobody's actually, a lot more education has to go on as to how that money is divided. And then we then have this 7.5% added tax. How does that impact on the sustainability?
All right, thank you. That's a good question. And I think it's important for people to understand this, that in reality, value-added tax is a transaction taxes. It is more like the person consuming the service is the one paying. Somebody comes to watch, maybe the ticket is 5,000. The law requires you, because you're enjoying this service, the law requires you, the company giving that service, to charge the person enjoying the service 7.5%. Just like if you go to a restaurant to eat, you see the VAT on it. Even in Lagos, they will even add consumption tax to it.
Yes, it
yeah. So it is you who is consuming the tax that is paying for it. It's not an additional burden to the person providing the service. The duty of the person providing the service is to what? Charge it and what? And remit. Now, number one. Number two, if the person rendering the service now knows the law, in order to manage his cash flow, because at the end, it's cash flow, where the company has suffered VAT in delivering that service, that company has the right to deduct all the VAT that he suffered in producing that service. And that VAT that he suffered is what they call impute VAT. So yes, he has charged somebody a total VAT of 500,000. But he, in the build-up of delivering the service, maybe for instance, the cinema people, maybe they rented a place and that place where they rented charged them VAT,
yes.
Right?
Yes.
You get, and maybe the place was 2 million and they charged a VAT of 7.5%. They've suffered technically some about, say, 70,000, right? Mm-hmm. When that cinema company wants to remit the VAT that he collected from cinema, people that came to the cinema, he first had to deduct the impute VAT that he has suffered. And it's not only on rent. So that means in his accounting, in the accounting of a cinema company, they need to account for VAT impute separately. If they don't log it in their GL properly, they will not be able to track it. So the law allows you to first deduct all the VAT you have suffered before you remit to the government. So in reality, that's one part. I know there are other sides to it because I heard the issue of double tax, but because of our time, we won't talk about that. Yeah.
Okay, so
to add, sorry, sir.
Go ahead, because that's what I was going to ask you.
To add to what Mr. Abraham have just said, apart from the law of giving you room to remove your inputs VAT, another thing is that once your turnover is less than 100 million, no VAT.
100 million, no VAT. Is that no corporate?
VAT. Yes.
Corporate. I think that ties into what VAT. You had said before,
yes.
As to how do you structure your companies to take advantage of the tax law. So if your company is not up to 100 million, then you are able to take advantage.
No VAT.
No VAT. Okay.
Watch out for that. There's a lot of things underneath. I was asking him when he was sitting beside me. I was asking him all the questions. How will I know if my business is going to do 100 million a year? What if God blesses me? I have to go to 120. I was asking him, but again, that's not the story for today. He has just said what the law is.
I think we should stick with what the law is. When the guidelines come out, then we can have we can have a bit.
Would there be an extra guideline?
Yes, of course.
Of course, there has to be guidelines. Implementation guidelines. A lot
of things going on.
We are waiting for the implementation guidelines.
You think so?
Yes,
so can I say to the House now? Are you confirming to us that we are?
No, there will be definitely.
Yes,
there
certainly.
Will be.
Okay.
Certainly, there has to be implementation guidelines. Yes, we are still in January.
Yes.
And what I will encourage the industry participants and stakeholders to do is to make sure that they contribute to what comes out in those guidelines. If we sleep on what our concerns are, we will just get guidelines that do not fit our industry, and we will just be complaining about it. VAT threshold and its applicability. So how does it apply throughout the entire sector? I know we've talked about the cinema, but in relation to the other parts of the film industry, VAT?
It's the same thing, nothing changed. VAT, nothing changed. 7.5 across, the same threshold, 100 million. Apply.
Okay. So if I'm not a company, I don't take advantage of that.
If I'm not a company, so far you are consuming, you pay it.
Okay.
Yeah.
For the individuals, can I do input and I'm a freelancer?
No, you
input,
can't.
Output.
What do you want to input? The transport is it the transport you pay to go and buy food in, in restaurants?
Okay, on enforcement, there's a perception that enforcement in the creative sector is still limited. I still recall when a freelancer walked into my office and wanted us to advise. He said, but the only problem I have is tax. I don't understand it and I haven't been paying it, so I don't know what you people are going to do for me. With increased digitization and reporting, what are the real enforcement risks creatives should be aware of? Okay. You know, most of the creatives they're actually quite well-known people, and we like to ensure that their reputation is in order. So in terms of enforcement risk, it impacts on them a lot more significantly than other people.
If we are in the same page, the question is like, what trigger the regulation attention? Abi? What trigger regulation attention? Yes. Okay, number one, I would say high value transaction.
High value transaction.
Large irregular bank deposits without a corresponding tax filing. What do I mean by that? Mm-hmm. Irregular bank deposit without irregular filing. That is, we are seeing money inflow and we track the name. We can't find it on tax promas. No tax registration. Nothing. It calls for alarm. Another one again is social media and lifestyle audits.
Social media and lifestyle audits.
You know, we know your business, we know your industry, and we compare your lifestyle with your industry, with your business. Is not commensurating. It calls for attention.
Okay.
Another one, to stop there, third-party information. Third-party information goes a long way. I might not know you. I might not know your firm. You know, maybe you have charged withholding tax. You've charged withholding tax on someone that do contract with you, and the person is not happy. And come and report to you, hello, Mr. Anke, there is one firm, I want you to go there. Third-party information. So there are so many things that can call, regulation attention a lot.
I think Mr. Michael has actually let out some secrets that we need to hold. We need to put in front of us very quickly. Before I turn the questions over to the audience, I will come to Abraham and say, many creators struggle to understand the true value of their work, whether it be licensing, partnerships, outright sale. From a tax and business perspective, how do you think the creators could go about the valuation of their intellectual property?
All right. That's a very important question. So I think for the IPs you own, I think one of the areas that will help you know the value of your creative work is first your cost of production. The cost of producing that content, right? Of doing that thing. And it's not just the overall budget. It's also what formed it. What formed it is looking at all of the lines that include how much you spent on cast, how much you spent on rentals, how much you spent on acquisition, how much you spent on extras, how much you spent on the core, how much you spent on post-production, and who you use. So first is proper accounting, because that data itself will help you when you want to do something similar. That's one. The second part is if you have tracked the costs properly, including even tracking your barter deals. You can actually track barter deals and cost it. Because in the Nollywood industry, there's a lot of freebies. I know Kiki knows Busola, so we help each other. And then you don't pay Busola for a real value because she's my friend. Okay. But if you really want to know the true cost, is value Busola and put the cost on it. It will just be what they call in accounting, what we call below the line, right? You put it in, right? And so you can then begin to track all the revenue you earn on that particular creative work. You've got to really be deliberate. So that way, and to be honest, in the US and South Africa, that is exactly what they do. Really. So, and guess what? You will think it's for the sake of outsiders or for tax purposes. It's not really for tax purposes. It's even for yourself. In the company I was referring to, the investors I was talking about, on a simple accounting application, they can track 184 projects they've ever done, commission content, across 7 years. And if they want to determine the next budget for a similar content, you know what they will do? They just go back to history. And not just look at the total budget. No, they're going to look at every breakdown of the actual cost that was spent on something similar, They will even look at how much was charged by a particular cast, including most of the actors and some of the actors I saw here today. How much they charged that year, and the contract they signed, everything is all tracked, and they can see it pronto. If anybody is going to grow, that is the kind of line. You feel like you're sitting in the comfort of your house and you can see the numbers. And I think numbers are very important. I know when Okwe was making his presentation, he was talking about where the problems are. The problems of the numbers is a function of accounting. The problem of why we don't have international investors invest a lot is because most of the Nigerian businesses are not structured. We're so brilliant, we're so good, we've got the content, we've got the story, but we don't have the structure. The moment we begin to have the structure, there's so much money to make, more than oil even.
I certainly do agree. They always say content is the new crude now. I think the first thing in valuing your IP is to actually register those ones that can be registered.
Absolutely. Yeah.
And I think from what he has said, put a number to everything, including those that do not have financial numbers, put a number to it. At this point, I will turn the question into the crowd. And I don't know, any questions? Who goes first? Tax is going to be the live wire for all of us in our personal, in our business capacities, and even as organizations and associations. I can see there are two people, I think one lady, two ladies, certainly two ladies up there. Thank you.
Good afternoon.
Good afternoon.
My name is Joy. I'm a screenwriter and also a filmmaker. Thank you very much for this illuminating session. So concerning the tax, so recently there was something I had to do with the Lagos State government, and they wanted my tax for the past 3 years. And then by the time it was calculated, it was running into several millions. And as a screenwriter, I'd been working for the past 3 years with different companies, and they had been taking withholding tax from the money I was being paid. But because I didn't even know I had the taxpayer ID at that point, because I had worked for a company previously for almost 10 years, and they were taking withholding tax from my salary. And there was a lot going on. I don't even know if they were remitting the money, but I didn't have a tax ID. So by the time I was now working on my own, I was self-employed, I was working as a freelancer, and this tax issue came up. And most times, I couldn't really get my tax ID, so they usually take 5% withholding tax from my fee. So by the time I had this issue with the Lagos State government, and they were like, they brought out all these millions for me to pay for the past 3 years. And I was like, but they have been deducting 5% withholding tax from my fee. So are you not saying I still have to pay the same tax that was taken from my fee? So I'm confused at this point. If the company taking this 5% withholding tax, if they are remitting it to the government, am I still supposed to pay this money? So I don't know. I just need clarity on this.
Thank you. I think we will take the two questions together. If we could have the second question. And between Michael and Abraham, I think both of you will take the first question. Or Michael? Oh, okay. Okay, you take. So who's taking the first? Okay, the second question, please.
Good afternoon. My name is Cassandra.
Hello, Cassandra.
I'm asking with regards film producers that make films across different states. My first question is, how do you avoid double taxation and jurisdiction disputes? Then for filmmakers who make money from different avenues, distribution, royalties, probably even script writing, acting, how do you inculcate all your personal income tax?
Okay. Okay, so the first one was about the
withholding tax has been deducted earlier. Am I going to pay?
And the high tax bill.
Okay, I think I should define the word withholding tax for you. So, withholding tax is an advance payment of income tax, meaning that I am taxing you now. I'm taxing you now because forgive me, I have trust issues with you. That's the government. I have trust issues with you because I don't know if at the end of the year you will walk to the tax office and say, behold, this is me, tax me. You likely will not do that. So withholding tax is just like In case you don't come, it's just to drag you into the tax net. So the person paying you has the responsibility of deducting withholding tax of 5%. The average income tax in Nigeria is 7%. That is the lowest. Lowest, 7%. So they just charge you 7% on your income, right? 5% on your income or 2% on your income just to hold down, right? So typically, what typically will happen is that at the end of the year, you're meant to what? To file. So let me explain to you in simple terms, right? If throughout the year you earned 2 million, and maybe you did work for two production companies, 1 million, 1 million. Each of them charge you 5%, 5%. 5% is how much? That's 100,000, isn't it? Withholding tax were deducted from you. Number one, the first responsibility you have is to follow your withholding tax credit note. It's like money. They only collected the money in advance from you. The money, 2 million would have been paid to you.
And when you say follow, what's the exact?
The person who deducted the money from you, you need to ask for the credit note. And these days, it's not by, in the past, it was hard copies. But these days, you get it by email. How many of us have gotten email from LRS saying, you see beautiful hands up? You see that? That means they know. In fact, by the time you log into your own LRS portal, you will see all the withholding tax deducted from you. That's one. At the end of the year, we just talked about 2 million, right? You earn 2 million at the end of the year. If you apply the lowest rate of tax of 7%, that's PE, on your 2 million, that's 140,000. Meaning you were meant to pay 140,000 as taxes. But what you will now say is, I'm paying 140,000, that's true. But I have already paid 100,000 in what? In advance, that's your withholding tax. But you can only claim that withholding tax if it was paid by the person that what? That collected it, that took it from you. So that means you got to track, and that's your responsibility. So in your own case now, you know what the government simply do? The way they could actually know your total revenue was because a particular company you work for was a very dutiful company. They created PID for you in those days. And that PID started following you. So all your credit, all your withholding tax was being tied to that account. The moment you stepped in, they could search for it. They could even, and how would they know your total revenue? By all the withholding tax they have been charged, they just upgraded by 95%. They were taking 5%, is it not? So your total withholding tax was just 5% of your income. So they will now gross it up to 100%, and they say, here we go. This is your money. Pay me. Do you understand? That's why you should structure.
Okay, please, I want to ask, just for clarity, because I'm still trying to learn and understand. So, sir, you say, so if the withholding tax has been remitted to the government,
Right.
does it mean now the personal income tax? Because in the case, I'm not saying that it's me. I'm just saying for those records, I'm not saying I'm the one. Okay. So in cases where you're remitting to the government and they still come back and tell you that you're owing your personal income tax of, say, 30 million naira, but you've been remitting over the years.
You're remitting withholding tax?
No, you are remitting. No, withholding tax is still sorted out, but you've always been remitting, and then they just come with the figure that, okay, based off of what we saw on your social media, whether or not it is free work you were doing for them, and because you thanked so many companies for engaging you in this last year, we think this is how much you should pay. How do we go about that? What are we deducting? What would the actual personal income tax be? What exactly are we doing?
That's a very good question. The Nigerian, and forgive me, unfortunately I'm not speaking for you people, I'm speaking for the client. The Nigerian tax people are sometimes can be very interesting people. What they do is typical best of judgment. They look at you, you have fine heels, fine face, you have 10,000 likes, and then you make noise. I got 1.5 million box office. And then you say all of that noise, they say, okay, here we go. And then they give, in reality, they don't even know that only part of the money is coming to you. They just say, pick the numbers, right? And they give it to you. But you see, what gives you peace? If you have been keeping your records, guess what? You place the book. We have the client in my firm. They billed the client 2.5 billion in taxes. By the time we finished, we knew we were paying. It was structure. We ended up not paying anything to the FRS. Because the first thing is the buga. So, to be honest, and typically what Nigerian people do is they try to look at how to settle because you are not keeping the books. But if you are keeping the books, you contest it. You contest it. You contest. Many people have tax consultant and a lot of people have tax consultant and not financial advisors. who just come and say, let's go and negotiate. Because they have a share in it. But what you need to do is, where's my books? You defend the book. You defend it for 2-3 years until you are fine. You need to know your books before you can defend that kind of a thing. And I think that's what you need to do. Yeah.
So does that help? The first question. Hello. That's a complete answer to that. Okay, the second question.
One, regarding the multiple taxes. The last time I checked, NTA and NTA did not directly, address multiple taxes at state level. But the NRS, in conjunction with the JTB,
Joint Tax
Board, can encourage the state governments, to issue more clarity or to discourage the informal levied lapses that hinder, success of production or that leads to multiple taxes. So what I would advise stakeholder is to issue a petition to NRS and Joint Tax Board for clarity, to send a clarity to the state government. But in which that's why I said the law is still in work in progress. I'm very sure before the end of this month, something will come out regarding it.
Can I give a suggestion?
However, most of these multiple taxes, if you look at it very well, they are informal. Most of them are all this omonile. You went to a deep bush to shoot. Omonile, kinikom, they are informal. The question is, how are we going to capture them? And that is one of the reasons for this new law to bridge all the gap. So that is I would just say about that. Yeah.
She also mentioned that if she gets an income from different sources, royalties, she mentioned different aspects. How does she combine everything for tax?
If you get income from the
different sources, so she's a film producer
from different states.
Yeah, no, not different states. Different arrangement, different sources.
So far as royalty, they are royalty. All will be added together and be taxed appropriately.
Okay, the appropriately she's asking for. What
percentage? Are you looking for 2%?
No, she's asking what percentage would apply.
5% nominate royalty. 5%.
Royalties 5%.
Yes.
What are the other channels you mentioned? You mentioned royalties. Royalties 5%. Distribution.
Sorry, royalty is 10%. Both in the resident or for non-resident is 5%. For resident is 10%. According to withholding tax schedule. Yeah, it's me. It's law. I'm not doing. No, why? I'm looking at it here. This is withholding tax schedule in front of me. So royalty, moving license, distribution rights, scripts, optioning, etc. Corporate recipient, resident 10%, non-resident 10%. Resident, non-corporate 5%.
Okay, so 5%, resident, 5% individual and
exactly,
10% corporate.
Exactly.
Okay.
Exactly. So it's the law. We might change it tomorrow.
Okay, I know we have a lot more questions. I don't know if Mr. Riibi and Mr. Poga will agree that they could come and meet you afterwards.
Of course.
Just for this session. At other times, they are in their offices. But one thing I would like to say to the industry is that don't let us have a situation where guidelines come out from the NRS, the National Revenue Service, that we do not have an input into. Let us have guidelines that speak to the sector that we represent, the creative sector. Thank you very much.